You've seen the headlines, they're everywhere, and they're getting bolder. Major global institutions are making wild predictions, claiming India will surpass the United States' economy. Some say 2050, some say 2040. And a recent bombshell report from EY points to a very specific year, 2038. But here's the thing, the real story, the one that actually matters, is way more complex. It hinges on a critical detail that most of these reports just gloss over, a detail that changes everything. The debate isn't just about when India will overtake the US, it's about the fact that, by one crucial measure, it's kind of already happening. We're going to break down the huge difference between something called nominal GDP and a much more revealing metric, purchasing power parity. And in doing so, we'll uncover the surprising truth about which nation will really hold the economic crown in the coming decades. What you're about to hear will reshape how you see the global economic order. Section 1. The setup. Two sides of an economic coin. On one side, you have the reigning champ, the United States of America. For the better part of a century, it's been the undisputed heavyweight. Its economy, measured in what we call nominal terms, is the biggest in the world. For 2025, the US economy is a colossal machine, a giant shop that produces over $30 trillion worth of goods and services every year. Its currency, the US dollar, is the world's reserve currency, the bedrock of global trade. American companies like Apple, Google, and Amazon are titans shaping our culture and how we live. The US military is the most powerful in history, backed by this immense economic might. When you picture an economic superpower, you're picturing the United States. Its growth, while mature and slower than emerging markets, is stable, projected by the IMF at around 1.9% to 2.1% annually. But this titan is facing some serious headwinds. Its government debt is massive, raising questions about its long-term health. Its population is aging, with a median age of 38, which naturally slows down growth. The US story is one of established power, but also one of new challenges and slowing momentum. Now let's look across the world, where a completely different story is unfolding. This is the story of India, the challenger, a nation going through one of the most insane economic transformations in human history. For years, it was a sleeping giant. Today, that giant is wide awake. India is, by a long shot, the fastest growing major economy on the planet. Where the US grows at a steady 2%, India is rocketing forward at rates projected to be between 6.4% and 7% for the foreseeable future. That's more than 3 times faster. And this isn't just a flash in the pan, it's a deep structural shift. The biggest driver? Demographics. India is young, incredibly young. Its median age is just around 28.8 years. While the developed world, including the US and China, is dealing with aging populations and shrinking workforces, India is hitting a demographic sweet spot. It has the largest youth population in the world, a seemingly endless supply of workers and consumers who will fuel its economy for decades. This is a force of nature, a tailwind that's just getting started. On top of that, India has been pushing aggressive reforms. The Goods and Services Tax, GST, turned a messy patchwork of state markets into a single economic zone. The Unified Payments Interface, or UPI, has sparked a digital finance revolution, bringing hundreds of millions of people into the formal economy at a scale the world has never seen. These reforms, plus high savings and investment rates, are building a solid foundation for decades of growth. So you have a classic matchup: the established, powerful, but slowing champ versus the young, fast, and ambitious challenger. Section 2. The real story. Unmasking. GDP, nominal versus PPP. Okay, this right here is the key to the whole debate. It's what unlocks that surprising truth I mentioned. Most headlines and news reports you see all quote one number: nominal GDP. It's the simplest way to measure an economy. You take everything a country produces in a year and you value it at current market exchange rates, converting it all to US dollars. So if India produces 1 trillion rupees worth of stuff, you convert that to dollars and boom, that's its nominal GDP. It's like the sticker price of an economy. But this method has a huge, glaring flaw. It doesn't account for the cost of living. And this isn't some tiny detail. It creates a massive distortion. Think of it like this. Imagine two software engineers. One lives in New York City and makes $150,000 a year. The other lives in Mumbai and makes the equivalent of $50,000 a year. In nominal terms, the New Yorker is 3 times richer. No contest. But what can that money actually buy? A 1-bedroom apartment in Manhattan might cost $4,000 a month. In Mumbai, a similar apartment could be $500. Their $50,000 buys more stuff. It has more purchasing power. This is where our second metric, purchasing power parity, or PPP, comes in. PPP is the economic version of comparing what those salaries can actually buy. Instead of just converting currencies, it asks, how much money would you need to buy the same basket of goods, a loaf of bread, a haircut, a bus ticket, in different countries? For a country like India, where local services and goods are much cheaper than in the US, the difference is astronomical. When you measure India's economy using nominal GDP, you're valuing a haircut from a local barber at a price based on volatile exchange rates. It dramatically undervalues the real economic activity happening on the ground. According to IMF data, India's GDP in PPP terms is over 3 times larger than its nominal GDP. Think about that. The sticker price you see in headlines is understating the real size of the Indian economy by a factor of more than 3. PPP gives you a much better picture of the actual volume of goods and services being produced and consumed. Section 3, the re-evaluation, the race in 2038. So, let's get back to our big question. Can India surpass the US economy by 2038? Now that we have the right tools, we can give a much better answer. First, let's use the old lens, nominal GDP, the sticker price. In these terms, the US is still king and will probably stay that way for a while. Projections from EY and the IMF show that even with India's insane growth, it won't overtake the US in nominal terms by 2038, but its rise is still incredible. India is on track to blow past Germany to become the world's 3rd largest nominal economy by 2028. So while it won't take the #1 spot from the US, it will be firmly in the top 3, right behind the US and China. But now let's switch to the PPP lens, the measure of what an economy can actually do. This is where the story gets really disruptive. When measured by PPP, India is already the world's 3rd largest economy and has been for over a decade, sitting comfortably ahead of Japan and Germany. The race isn't some distant marathon, it's a sprint that's already in the final lap. The latest EY report, using IMF projections, lays it out in plain numbers. As of 2024, the US economy in PPP terms is around $25.7 trillion. India's is a massive $14.2 trillion. The gap is still there, but it's way smaller than the nominal numbers suggest. Now let's project forward. The report assumes a sustained growth rate of around 6.5% for India and 2.1% for the US, based on IMF forecasts. On this path, the crossover happens. By the year 2038, India's economy, measured in PPP, is projected to hit about $34.2 trillion. In that same year, the US economy is projected to be just a hair below that. This means that by 2038, India is forecasted to surpass the United States as the world's 2nd largest economy in real terms, with only China ahead. Let that sink in for a second. In terms of the actual volume of goods produced, services rendered, and the real economic muscle wielded within its borders, India is on a clear path to becoming larger than the United States in just over a decade. The headline-grabbing prediction isn't just a wild guess. It's a calculated forecast based on powerful trends. The surprising truth is that the question isn't whether India can become a superpower on par with the US. It's that when measured by the real stuff of life, it's set to do just that, and much sooner than most people think. Section 4, the complication and the nuance. Now, it would be wrong to say this is a done deal. Economic forecasting is tricky, and India's path to a $34 trillion PPP economy has some huge obstacles. The single biggest challenge is per capita income. While India's total economic pie is getting enormous, when you slice it up among 1.4 billion people, the pieces are still pretty small. India's per capita GDP is currently around $2,800. Even with massive growth, one projection from India's government think tank, Niti Aayog, suggests it could reach between $18,000 and $20,000 by 2047. That would be a monumental achievement, lifting hundreds of millions out of poverty, but it would still be far below the income of an average American today. So while the national economy will be a giant, the average Indian citizen's wealth will still be playing catch-up. This leads to the next big hurdle: jobs. India's demographic dividend is only a plus if its massive young workforce is educated, skilled, and actually employed. Right now, a huge chunk of the workforce is stuck in low-productivity agriculture. The government's dream of a developed India by 2047 depends on moving millions from farms to factories and offices. This means huge investments in education, skills, and creating an environment for large-scale job creation. If it fails, that demographic dividend could easily turn into a demographic disaster. Then there are the risks. India has to manage inflation, fix its infrastructure gaps, and handle a tricky geopolitical scene. Even so, India has shown incredible resilience. For instance, recent US tariff threats were analyzed by EY, which found the impact would be minimal, reducing growth by only about 0.1% thanks to strong domestic demand. At the same time, you can't discount the strengths of the US. It's still the world leader in tech and innovation. Its universities are the best on the planet. Its financial markets are the deepest. The dollar's status as the reserve currency gives it what some call an exorbitant privilege. The US economy is mature and has a proven track record of reinventing itself. This isn't an empire in decline, it's an established power learning to share the world stage. So this isn't a simple India wins, US loses story. It's a story of rebalancing. It's about a new economic pole emerging, creating a world that's less unipolar and more complex. India's rise in PPP terms signals a massive shift in global consumption and production, but it doesn't erase the immense wealth and power the US will still have, especially in nominal terms and on a per capita basis. So, where does that leave us? We started with one question: can India surpass the US economy by 2038? The answer, as we've seen, is a definite yes, but with a huge asterisk. It all comes down to how you define surpass. If you measure economic power by the simple sticker price metric of nominal GDP, the United States will almost certainly keep its crown in 2038. It will remain the benchmark everyone is measured against. But if you define power by a deeper, more real metric, by the sheer volume of stuff an economy produces, by the real purchasing power of its people, then the story is completely different. By that measure, purchasing power parity, India is on a clear trajectory to surpass the United States by 2038 and become the world's second largest economy. Section 6. Call to action. This whole debate between nominal GDP and PPP isn't just for economists. It changes how we see the world. It's the difference between seeing a country's wealth on paper versus understanding the real lives of its people. So I've got a question for you. Which metric do you think really matters more? Is it the nominal dollar figure that grabs all the headlines, or is it the purchasing power that dictates what you can actually buy day to day? Drop your thoughts in the comments below. I'm genuinely curious to see what you think, and I'll be reading through them. And of course, if you found this breakdown valuable and it changed how you see the global economy, do me a favor and hit that subscribe button. We break down the biggest economic and geopolitical shifts happening in our world every single week, and you won't want to miss what's next. Thanks for watching.